Welcome everyone to this week's Q&A live where you can ask me, a chartered accountant, any questions that you might need an answer for. This is a live that I put out once a week and it helps any business owners out there who have a question in relation to run their business, tax, finance, anything at all that and you just want to run something off by an accountant. That's what this format is for. My name is Martin Brennan. I am a chartered accountant with almost 20 years experience working with small to medium sized businesses. And in today's Q&A live, I had two questions which came in from business owners, which I'm going to delve into, and also a topic as well that we're going to do. One thing to note is today's date is the 30th of January 2026. So anything that is time relative, just be aware that when it comes to anything that I'm speaking about. Right, in particular, today's is going to be a if anybody who had any sold any shares. Now, there's a lot of people out there. Well, there are people out there who work in multinational companies, and when they're working with multinational companies, they get share options. A good time for selling share options, of course, is just before Christmas when people need funds. So anybody who has sold shares and they have actually made a gain on that, just be aware that the capital gains needs to be paid on that by the 31st of January. So if you sold any shares between the 1st of December to the 31st of December last year, that there is a capital gains tax to be paid. It doesn't need to be declared just now, but the payment for that tax actually does need to be filed. So that's one tax thing just to get out of the way for anybody out there who isn't a business owner, but maybe has come across this channel and is aware that, oh, sugar, I might have sold shares. That's just a bit of information for yourself and that. Right, we're going to crack on because I understand I had two questions that come in, and if you have any questions, just please just send them in the chat or send them in the comments or get in contact with me through a DM. If you're watching this on YouTube afterwards, just send a link or a comment about your question, and I will be sure to answer that in a future video. Okay, the first question I am going to go with is topical one, very, very topical one that I get asked a fair bit. Okay, so this business has been doing extremely well. Did a profit last year in their accounts. So this is up to December 2025. So they made a profit, but they're still unsure about future spending. They're looking to continue to grow the business. Performance and visibility is good. So the performance has been steady growing for the last 3 years. Their profitability has also increased, but they're unsure about the profit and the timing of the taxations on this. And they want to hire a new marketing person to continue the growth of the business in a growth area that they've identified, which is the web sales. And they're just looking to speak about something, just about my thoughts on that. Well, that is great. First and foremost, that you have an idea of where your business is. Having December 2025 accounts in January of 2026 is a great starting point. Knowing exactly where your growth areas are even better, and the fact that you have made a profit and the profitability is seen now. It doesn't say how much is in the bank, but I'm assuming that with the profit that you've made, I'm assuming that this business is functioning quite well, and they also have the funds available to pay these tax liabilities that fall due. Of course, if you have a December 2025 account, or if that's your year end, you don't have to actually pay your taxes for 9 months after the year end. You're a year end, so that you have time to gather that if you had to gather that. So the performance is extremely well, and you're looking to hire someone because you have identified a growth area, which is your web sales. This is this happened during COVID, where just going backwards during COVID, people had to sell online. An awful lot of people actually migrated their business from what they were doing in store. They had to get an online option for people to be able to make sales. So online is another function. The one good thing about web sales for a lot of businesses is the amount of touch points that needs to happen. So if you're selling something online, of course, you don't need someone to meet and greet. You don't need someone to actually physically take the money from the customer, but there are other costs involved, and this is led nicely to the actual question about you want to hire someone who's going to manage that down the marketing side. So the biggest expense that comes with a web sales business is, of course, the marketing side of it. A few years ago, I was helping a business that was running online sales, and their spend was almost 15% of the turnover when it came to the marketing side of it, which was extremely effective. Now, I'm not saying that every business needs to spend 15% of their sales, but an awful lot of businesses that I would look at would be spending anything between maybe 0.5% of their turnover up to about 2 to 3% of their turnover in actually marketing. And the returns on that have been stagnant. Really, they have been stagnant from what we've been looking at. With regard to hiring someone, like this is a profitable business, I would I would definitely think that if you are going to be hiring somebody in on the marketing side, that you need to have set the clear expectations for this person, exactly what they're going to have to achieve in order for this to be a good decision for yourselves. So if you have growth potential on your web sales, I would just say it's going to go from 1 million and you want to bring it to 1.2 million. So we just say a 20% increase in your overall turnover. Like that is a good bang for your buck if the salary is um we'll just say 50,000 in the year. So you're making a good return on that. So, first of all, knowing what you want your staff members to work on and where do you want them to work in the business and what's expectations that you have set for them in order to achieve the goals for the overall strategy of the business is the key point when it comes to hiring an employee in any particular part of the business, because it's very difficult to bring someone in and then realize, oh, sugar, they're actually not fulfilling the role that you actually wanted. So that was an excellent question to start this off. And I wish you the best of luck with your business. And could you please come back to me in 6 months' time or in 3 months' time and let me know how successful this has been for you, especially if you're keeping your accounts up to date. The impact should be there should be a little bit of a lull just as the person gets up to speed, but you would be hoping to see maybe in Q2 or Q3 an improvement in your sales, especially on the webs, if that's what you've identified as being the growth area. So that was a very, very good question. Thank you very much for that. Okay, second question. What's one thing I should be doing monthly to avoid a tax or VAT surprise? Now, this is a very, very common one that I get when it comes to systems. This is what I do be harping on all the time. I'm always harping on about putting the systems in place to capture the funds to make sure that you have enough money for your VAT, corporation tax, income tax, RCT, PAYE. It doesn't matter what taxation it is, that you actually have enough money put aside for these items. So, in order to do it on a monthly basis or putting away money on a monthly basis to avoid these items, I would focus on firstly how how accurate are your accounts? So are you doing weekly bank reconciliations? So for argument's sake, people will be doing lodgements to the bank. We're just giving an example. Probably the best thing for this. So you're a retail business, and your retail business has cards. You're taking payments via, would you say, Elavon or uh, WorldPay at the till. So that money is hitting your bank a few days after the transaction has happened, and you reconcile on that. But you're also taking cash, and the cash sales that you're taking are being lodged, would you say, once a week, or they're being taken from your place of business and they're being lodged. You're using a courier service to take the money off site, and it's being lodged, would you say, once a week as well, or a couple of times a week. So you know how much money is being lodged so you can have your till receipts. You know exactly what it is. And usually, the VAT can actually be calculated from the money that you've received through the till. So you would have an idea if you're using a digital online platform. You should be able to figure out or see very quickly how much money you've actually made and what VAT is going to actually do on that. And we'll just take this example first of all. Firstly, you would then transfer that amount that you had from the VAT, and you would just transfer that into a separate account so that you just get it out of your operating expenses account. What I mean by an operating expense account is money's coming in should and money's going out should be for the business. Taxation money should be kept separate because it is separate. Taxation should be a separate bank account that you strip out all those items. So the likes of, to avoid a VAT surprise, stripping that out on a weekly basis would mean that you're preempting what the VAT bill is going to be, and you're allocating that across and putting that into a separate bank account, which is a good process and a good way of doing business. Secondly, if don't have an online system, you're using a traditional till, and you're at the end of each week, you're actually filling this out, or you have a diary and you're putting this down on a piece of paper, exactly how much is going to be, how much you've received. You have an idea of the breakdown of your business. Again, you're in retail, everything is 23% on your sales, for argument's sake. You can actually then calculate that out on the lodgements that you have hit the bank. So it's not going to be an exact figure, but you are allocating or you're pushing money that you normally wouldn't push from the bank account into that separate tax account. And that's the key thing, to have that separate tax account available so that you have it for your taxes. That's the primary rule for that. Having it there for your taxation. So when taxes fall due, you have the money there. It's great. You have it at hand. You're not scrambling, think that you've got to pay your monthly salaries and a VAT bill and a PAYE liability all out of the one bank account. You have a separated out. And if there are problems, then you can address those as it falls due or as it happens. You're not you're preempting. So if you know your VAT liability is going to be, for argument's sake, would you say it's going to be 25,000, and you got a PAYE liability as well for five. So you've got 30,000 coming out of the bank at the end of this month. You've got 32,000 sitting in your tax account. You're covered. But if you had that 32 plus in your operating account, so there's 32 plus all the other expenses are going to come out at the end of the month because you're signed up to so many direct debits. All of a sudden, then things become a lot harder to manage because you're unsure of exactly how much money is going to be taken out because you just, when it's all muddled together, it just gets a little bit. It just gets clouded, and we would just want to make sure that we're clear when it comes to looking after things like this. So that'd be one thing I would recommend, would be to do that separation of money. And of course, the early awareness. So the earlier you know what your tax liability or VAT liability is going to be, that's the point you start putting away your funds. So you have that done in advance. That you're not waiting for the tax bill to be calculated and then paying or scrambling looking for the money. You're actually preempting. And a lot of the time, what will happen is you will actually put away the money. You'll put away too much money, and once that VAT liability has been settled, you can then transfer that back over into the operating bank account because it's been dealt with for VAT purposes, for argument's sake. Now that's another great question. One that it catches a lot of people out is the VAT surprises, POA surprises, and they shouldn't be surprises. That's the thing; they should not be surprises. If you're looking after your business well enough and you're keeping things up to date, you shouldn't be surprised that you have a large VAT bill coming in, because you should know. You should know that you're selling everything at a certain percentage, and oh, of course, I'm going to have to repay that. Putting the blinkers on and keeping the head down and thinking, oh, everything will be fine. It'll be okay. I'll find the money when I have to do that, deal with that. Oh, I got my overdraft in place here. I can dip into that if I need to. That's one way that business owners do look after their business, but it's not. It's a quite a stressful way for running your business. So try the separation of money, and that will hopefully help you avoid any VAT surprises. Okay, another great question. So thanks very much for sending that through, and I hope you get some benefit from that. And let me know if it has worked. So for your next VAT bill, hopefully you'll be in a better place. Okay, today's topic is why your numbers are always behind, and more importantly, how to fix it. It's a good way of doing it. Okay, so many business owners feel as if their numbers are always late. I had someone come to me at the end of 2025, and they just came because they wanted to get their books up to date for for all of 2025. We did that. The conversations that we had afterwards were fantastic because we were dealing with a full year's accounts in January of 2026. But they went away thinking, okay, I've got my accounts done for 2025. That's going to be great. I can send this off to the accountant next month. I probably won't. They're not going to continue to use the information they have, so to make the decisions for the business. They're just, I knew from the conversations I had with them, all they wanted to do was get up to date for compliance, and that was it. They have no interest in looking after the day-to-day run of the business to see how profitable it can be, putting away money for taxation, because there's a quite it's a good business, and there's money, there's no issues with money in this. Cash flow is quite strong. So it's not for everybody having up-to-date accounts, and for this particular person, they thought that they wanted to get it, but I know, I suppose time will tell in a couple of months' time, whether they come back again saying that they need to get things up to date or not, or I might just hear from them again next December. So it does depend on the business owners. But saying that, those accounts are up to date. I had the capacity in order to get them up to speed, which was most important. But people think that it's their accountant's role to get their accounts up to date, and it's not. It's not the accountant's job. It's the accountant's job to file tax returns. So come October of this year, all these 2025 income tax returns need to be filed. But it's not the accountant's job to get all this up to date. It's actually the business owner's job. And the business owner should be thinking like that, thinking that if I gather all of my information and hand it over to the accountant in January or February of 2026, at least plenty of time to get the accounts done. It does, which is great. But saying that, that accountant may leave that on the long finger and mightn't get to it until, would you say, June. Now it's not acceptable, but having it in June, have your accounts in June on a 2020 based on your 2025 figures isn't actually great. So getting the information to your accountant is one part of it, but getting the correct information to your accountant is the most important bit. So many accountants out there they will send out a pre-engagement letter. They will send out what they're looking for, and then it's up to you in order to gather all that information. If you flip that and you say that, no, I'm going to take ownership of my own accounts and I'm going to have a system in place so that I know without the accountant coming in to do the final year end adjustments that may need to be done, you have a good idea of how your business is performance. That is a far better way of organizing and running your business. So you're only using your accountant for the filing part of it, the compliance side of it. So if you have your accounts, which is 85% right at the end of December, you have the information, the trial balance sent off to your accountant in good time. They come back with a couple of questions. They don't have to do as much work on it, so that you actually can get your year-end income tax, corporation tax return figure from them. From a compliance side, you're in a far better position. So how quickly the data can be gotten from the client is probably the key part of this. In addition to that, what resources has your accountant currently to get those accounts prepared and put them back so that you can actually see how profitable your business was is another problem as well. But having a monthly and a good way of looking at this is that it shouldn't be a mammoth task to gather your information. It should be death by a thousand cuts. So each month, this is exactly what I need to do. So automation of the likes of bank feeds. How do you get your purchase invoices to the accountant? How do you get your sales invoices to the accountant? Does your accountant do your payroll? How do you get your payroll journals into the accounts? So all these items, once they're streamlined and they come together, means that the information is being sent to the accountant or being prepared by the accountant in good time. And it's actually not the mammoth task or the headaches that you think that, oh, sugar, I have to gather all that information for your accountant. So that would be a very good way of operating, and it would mean that your accounts would be quicker, your accountant wouldn't have to do as much, and you would have better control over your finances because you have an idea of exactly what your tax liabilities are going to be just based on having the accounts 85% correct. You don't necessarily need to have them 100% correct. That's your accountant's role, job to do that for compliance. Yes, um, to be honest, most of the businesses that seem to struggle with this, like gathering their information, sending it to their accountant, and then finding out in September that they have a tax bill that they don't have the money saved for. That's where the stresses happen, and that's where the problems occur for a lot of businesses out there. So, not having the clear numbers or an idea of what your tax liability is going to be is a problem when it comes to this. So it's not ideal, but it's a better way. So the quicker the information can be given to your accountant, or you can if your bookkeeper, that's probably the best way to combat the stress. Okay, so that's, and I've rambled on now for nearly 20 minutes. That was two great questions, and that's the topic that a very topical topic to go through as well, because January, everyone thinks that accountants aren't actually that busy, but in fact January should be one of the busiest times for accountants out there, because they're getting their 2025 accounts almost ready, because they have the VAT returns as well and all that, those items done. So if it is a case that you have any questions, let me know for next week. I will be covering. Um, I've got 4 or 5 questions have come in, so I will deal with any questions that come in on a sort of on a rota that I will answer them, I suppose, as they come in. So if you have any questions, just send me a comment and I will add those to the list. And until I'm chatting to you again, hopefully next week, if you got any enjoyment out of today's video, hit that like button. And until next time, will you take care of yourself and keep working hard in your business.